Hello and welcome to Connect, the weekly podcast for the California MBA, featuring one-on-one interviews with movers and shakers in the mortgage industry. I'm Susan Milazzo, CEO of the California MBA, and very happy that you could join us today. Before I welcome today's guest, I would like to thank our 2023 President's Council sponsors. Now, these are companies that have provided a tremendous amount of financial support for the California MBA, mostly so that we can continue to be very strong advocates for the mortgage industry before the California State Legislature and our regulators. Of course, advocacy is the cornerstone of what we do at the California MBA, so I'm very grateful for the support from this year's President's Council sponsors. This year's President's Council includes AmeriHome, Arch MI, Consolidated Analytics, Funding Shield, Incelerate, Guild Mortgage, Rocket Mortgage, and Western Alliance Bank. Thank you all so much for your support in 2023. With that, it is my pleasure to welcome to the Connect podcast, Rob Chrane, founder and CEO of Down Payment Resource. Rob, welcome.
Thank you, Susan. I appreciate you having me.
Yeah. So I always like to get started with a little bit of background. So tell us a little bit about your background and how you got started in the mortgage business.
Yeah, well, I actually started my first professional job was as a realtor, and was started out as an agent, got a broker's license. Then I, for about 10 years, managed branch offices. So I recruited and trained and managed realtors, and then made the switch to the mortgage industry and didn't look back, and spent a couple of decades in the mortgage business as a mortgage banker, originator, leadership positions, senior positions, and things like that. So that's my background. I was not certainly not a technologist, no technology background, and not a serial entrepreneur.
But yet here you are. You started Down Payment Resource. Tell us a little bit about getting the company started.
Yeah, so it was kind of one of those random things almost. Affordable lending and just the issues and the challenges around down payment assistance had been on my mind for a long time, and I had different experiences with it. But I was sitting in a meeting one day. I was a member of the Urban Land Institute, and that was primarily real estate developers, condo developers, home builders. And I was on a steering committee, and we were brainstorming about how to spend a large gift that somebody made to create what they called a workforce housing center. And we're sitting around in this conference room. Everybody's kind of scratching their head and asking, well, what is a workforce housing center? And my background, of course, being at the point of sale, whether it's real estate or origination, my mind first went to, well, if I had the money, I would do something about making it easier to execute on down payment assistance programs. Because even when you work in just a locally, a metropolitan area, there can be dozens of programs, and I just knew from my experience that could be painful. How do you keep up with all of that? And so for a long time I had said there's got to be a better way. And then fortuitously, I guess you could say that about 4 or 5 months later, because that idea kept churning in my mind. And then the company I worked for, I'd been there 12 years, expected to be there till I retired, but they suddenly filed for bankruptcy. It was 2007, right? It was the first wave of the credit crunch. So a year before everything happened in 2008. And my first reaction was, yikes, got to get a job. But I still had this idea. So I was really half-heartedly looking for a job, market testing this idea very informally. And it didn't take much positive feedback to motivate me to keep going in that direction. So I tell people sometimes, be careful what you wish for, because if you say something enough times, somebody's going to say, hand you the baton and say, well, go do it then. But I wouldn't trade it for anything. So.
Yeah, it sounds like a very, very successful venture. I do love stories about entrepreneurs. What advice would you give a young entrepreneur just starting out?
Yeah, a couple of things. First of all, whatever pain point whatever you're going to do to change the world, you got to be really passionate about it. You know, it's not about, I mean, yeah, everybody wants a big exit. Everybody wants to, you know, be successful, but what it takes to be successful, you have to believe in it wholeheartedly, number one, and you have to have a passion for it. It's too hard without that. So, you know, that's number one. Number two, I would say, everybody, when they start out, including myself, I learned this from firsthand experience, you kind of start out chasing that big whale. You know, you want to get that deal with a big brand name, you know, whatever industry you're in. You know, do you want to partner with Google? Do you want to partner with Amazon? Do you want to partner with IBM? Whatever it is. In my case, my first sales call I made was to Fannie Mae, and that's kind of a whole other story about how that came about. But you have to be careful, because somebody said about a large corporation that's kind of a household name, but I'm not going to name names, but they said, somebody who worked there told them one time, you know, we put more companies out of business by partnering with them than we did by competing with them. And I found out along the way, these last 15 years, I found out how that happens. And it doesn't mean somebody, you know, a company's evil necessarily. Yeah, there's some evil companies out there, but, you know, a lot of times it's, using the analogy of a big whale, it may be a big friendly whale, and they're playing around and they just accidentally roll over you and crush you. So I think that's something definitely to be thinking about when you're starting out. And then finally, if there's any way you can be self-funded and bootstrapped, if you can avoid venture capital. And I don't have anything against VCs, but you know, somebody told me one time, I was having a conversation with my advisory council, and I brought up something about funding, and one of the guys very candidly looked at me and said, well, Rob, you realize if you had taken venture capital, you would have been fired by now. And that was kind of a sobering moment, but you know, and a lot of that has to do maybe with the nature of what we do. This is not a VC play. It's taken a lot of patience, waiting for the world to catch up. But anyway, it has been so valuable to be able to stay independent and to do things the best you can, the way you can. I mean, there's pros and cons for doing it both ways, but so those are I think some of the things just starting out that I would be thinking about doing it all over again.
Yeah, it's great advice. I think that's great advice. And so, you know, you said you're waiting for the world to catch up. That kind of leads me to my next question. You know, 2023 is certainly a different market than the mortgage industry has seen in quite some time. I would imagine that lenders have a big appetite for the services of your company. Have you seen that this year?
We certainly have, and it's really, there was a big change starting about 2020 during COVID. But of course, for lenders, you know, we know the huge refinance boom, unprecedented refinance boom for a couple of years there. But even then, we were starting to see a renewed interest, a renewed appreciation for having this information that we curate. But certainly now that it's much more of a purchase market, you know, we have a deeper pipeline than we've ever had. I would still say, even for us, I've described it to people as we have headwinds and tailwinds at the same time. The tailwinds for the reason you just mentioned, but the headwinds are what's going on in the industry. Money is tight. You know, it's not easy for lenders to let go of any expenditure. So I would say where we're getting the best traction are the lenders that, you know, have they have the resources, they have a long-term strategy, they're committed to this, the market, you know, first-time home buyers, the underserved, you know, they have a strategy and a commitment to it. So, you know, it's we have a chance. So it's, you know, it's kept us alive. I certainly feel for everybody in the industry and the vendors and fintech companies that support them. It's tough.
It's a tough year, that's for sure. You know, I don't know if you know the answer to this, but maybe you do. How many down payment assistance programs are available just in the state of California?
Yeah, I'm glad you asked, and I'm glad I remembered to look it up before you ask, because I thought maybe you might ask. And this actually came from, we do a quarterly index, we call it Homeownership Program Index, HPI. And so this was from in April, so that was the first quarter index, where the next couple of weeks we'll be publishing the second quarter index. But at that time, at the end of April, it was about 304 programs. And those programs were represented or administered by 229 different agencies.
Wow.
So again, how is anybody supposed to keep up with that? It's so fragmented and, confusing and contradictory rules and things like that. And at that time, about 63% of those programs were funded. I'll be interested to see what the funding percentage is, but that's still a lot of programs to choose from. There are always a lot of choices.
Yeah, it sounds like it. Why do you think it is that some lenders shy away from down payment assistance programs?
I think for the same reasons that I kept saying, before I started this, I kept saying, there's got to be a better way. It's the unfamiliarity. There are a lot of programs coming from different agencies. How do you keep up with it? The funding status, is the money available, not available? What are the rules to get the money? What are the benefits? So it's unfamiliarity, and it can be overwhelming. And what we try to do, because for a long time we were so proud of the fact, we've got over 2,300 programs in our database, and we keep them up to date every month. And then somebody pointed out wisely that, the person sitting on the other end of your demonstration, your demo, when you're talking about this, that may not be a cool number. Then that's probably overwhelming. And so we're careful now to point out that you do not have to boil the ocean. Because of the fact there are so many programs, start small. If for lenders who are not yet doing these programs, start with the easier programs, the community seconds, for example. In our database, our DPA directory, we have filters, and one of the filters is show me programs that have no participation requirements. That's a good starting point. And start with a few, build up your competency, get over the fear that it's not as nothing's as complicated as it looks, right? It's just, even when I was first originating and did mostly conventional loans, if I had an opportunity to do a VA or FHA loan, that was, that was a little bit intimidating because it was not what I did every day. So, but once you do it, you realize it's not that hard, and you just kind of build up your competency.
Right. Yeah, I think starting out with the simpler ones probably does make a whole lot of sense. Down Payment Resource has been named most innovative new technology by HousingWire Tech 100 and Inman. Just share with us what did recognition like that feel like after all these years of building the company up?
Yeah, well, I won't lie to you. Recognition feels good.
Yeah.
Everybody works hard, and it's not just for me, for the team, because it is a team effort, and we have just an unbelievably dedicated, passionate group of people who work very hard to do the arduous job. It's so manual, keeping up with 2,300 programs, and these programs nationwide that we have represented over 1,200 different agencies. So anyway, I'm happy for myself, but I'm also really happy for the team to get the recognition. The other thing, and I think one of the reasons it's especially important, is because the nature of how our platform works. We're connecting people with information, whether we're helping loan officers, realtors, consumers. We're connecting them with information. We're automating the matching process. Somebody described it, and actually it came up again recently. Somebody said, oh, you're like Match.com for DPA, automating a complicated process and making it easier. But people don't consummate the transaction from our platform. So while we know how many people we're connecting with information, we know things like, what's the click to lead rate when a lender or a realtor is putting this out, marketing it digitally. We know all those kind of things, but there's no way to compel people to tell us, well, what happened later. So, we just have no idea. We do case studies, we have anecdotal information, but we do know, for example, last year more than 3 million people used our platform to find down payment assistance, and that's not our own platform. That's not our website. Part of it's our website, but the vast majority of that is through our partnerships, whether again through lenders, through multiple listing services, the large real estate search portals like Zillow, Redfin, Realtor.com. And the other thing that about that is, in a way, it's probably a good thing that we don't necessarily know all the outcome, because I think at some point, when you have the numbers like that, people, somebody's getting help.
Right.
Sometimes it's better not to know, because then I don't think you run the risk as much of becoming complacent or cocky or whatever. You just do it because you want to do it, and it's a good thing.
Right.
And that's the way our team feels. So,
well, congratulations on that recognition. Very well deserved. I also see that you are a volunteer for MBA Convergence program in Memphis and in Columbus, as well as a volunteer for Black Homeownership Collaborative. You want to tell us a little bit about those efforts?
Yeah, and actually Convergence is also just launched in Philadelphia, so three markets for Convergence. And our role is to share first of all, to share our expertise about these programs, to especially because we get very deep into the guidelines. It's not just here's $5,000, here's $20,000, and yes, it's funded or not. We have potentially a couple hundred data points for each program. So we share that, our expertise. We look for opportunities to overlay other people's data with our data to come up with some unique reports, and especially like in local areas. And then we share some of our tools on a pro bono basis. So that's kind of our role in both of those initiatives.
Fantastic. Great. Yeah, great connection with both of them. We love supporting the MBA Convergence programs as well here at the California MBA. I do know Down Payment Resource recently became a member of the California MBA, and of course, we're very grateful for your support through membership. Can you share with our listeners why you felt it was important to become a member of the organization?
Yeah, we're very happy to be a member and support it. And one way I would answer that is can you imagine life as a mortgage banker without an organization that's out there doing everything they can to create an environment that's conducive to doing business? And maybe that's too high level or whatever, but I mean, and I think your listeners, your members know about the great advocacy you do. I mean, there's so much to keep track of, that if you're in the business, whether you're a business owner, senior leader, a loan originator, process, anybody throughout an organization, you're doing business. There's so many things that need to be done to create that conducive environment, and to have an organization like yours with specialists and just smart people focusing on this stuff day in, day out. Like I said, I can't imagine being in business and not having that kind of support.
Well, thank you. We're certainly grateful for your membership. And Rob, just congratulations on the success of Down Payment Resource. What a great story you have to share.
Well, thank you, Susan. Thank you again for having me. And we look forward to working with you guys any way we can to help.
Yeah, excellent. Thank you for being here today. And thank you, everyone, for joining us for today's podcast. To access any of our past episodes, you can follow us on our YouTube channel. We're also available on Apple Podcasts, SoundCloud, and Spotify. That's it for this week, and we'll see you next time on Connect.